Hey everyone, welcome back. First of all, a big thank you to all the returning and new viewers that have watched my videos. It's quite encouraging and I'm quite thankful. Now, I don't have any stock portfolio update today or a dividend update. In fact, my portfolio is down a little bit from my last update, but I think I've learned to live with the volatility of the current times. And I still think that it's going to continue for a little bit, but you know what? You just stay in the market. Now, today I wanted to talk about a stock that I've seemed to have a love-hate relationship with it. The more I chase it, the more it runs away from me. Or in other words, the more I invest in it, the more it falls. And I'm talking about Meta or Facebook. Meta reported its earnings 2 days back, and before the earnings, I'd invested some money into it. Again, some fractional shares, but hoping that the stock is going to be up, but it was down. And from there on, I just thought, I'm going to do a little bit more analysis in terms of what's happening with Meta. When I look at the financials, they look pretty solid. When you look at a free cash flow, it looks pretty solid. Obviously, your decision should be based on free cash flow. But in case of Meta, despite free cash flows, it's been struggling quite a bit. And I thought of sort of, doing some research and putting out here, looking underneath the free cash flow as to what's happening. So I did some research and in a very simplistic way, I've tried to explain the things that are hurting Meta. I think anybody who would watch this should have a pretty well-rounded view of what's happening with Meta. Again, I'm not an expert. I'm definitely learning as I go, and I definitely learned quite a bit. I was putting this presentation together. But again, I was quite frustrated with Meta's earnings. This is now my biggest loss on my portfolio. I have about 16 shares. I've gone on record and I've said that I want to own 25 shares. Whether I'll own 25 shares or not, we'll see. But again, I just thought this might be, something that might be helpful for anybody looking at Meta. So here goes. I'll just walk you through this presentation. The first slide is obviously the thumbnail, and I know it's pretty dramatic, but it kind of it's kind of reflects my sentiment. And I'm just saying, why Meta? Why? The more I try to love you, the more you hurt me, and that's absolutely true. I have gone into Meta a few times, and every time I go into it, it's sort of decides to sort of go against what I think it'll do. Anyways, as a joke, I put together out here the stock price chart of Meta today. This is one day after the earnings, and if anybody has watched Bollywood movies, you would know that when a patient in a hospital is about to die, the camera pans on to this screen that shows the pulse of the patient. And if the pulse goes straight, then the patient is dead. And then sort of, the dramatic mourning happens just in the Bollywood fashion. So when I looked at the stock price chart for today, it just looks like a straight line. And I was like, oh my God, is Meta dead? And again, jokes apart, I know I lost some money in Meta as the earnings came in. But again, I just thought it was funny, lighten my mood up for sure. So I thought of putting it out here. Now, the next slide, sort of, summarizing what's happening with Meta as far as earnings was concerned. So Meta reported Q4 earnings of $3.67 EPS. That was down 5% year over year, and that was below the analyst estimate of $3.85. Now, last year and year before, or sorry, actually 2020 was a stellar year. It was the pandemic year where a lot of companies had crazy growth. So I'm really not surprised by Meta missing the last year mark. But obviously it was under the analyst estimate of $3.85. That definitely hurt it. Revenue grew in line with what the analysts were expecting. So growth of 20%, $33.67 billion. So roughly in line with what the consensus was. And when you look at the guidance for the next quarter, that was interesting. So before I actually talk about this third point, for those of you who may be new to investing, it's important to understand that a stock moves based on two results. One is obviously how the quarter performed, And if the quarter performed better than analyst expectation, it obviously helps the stock. But it's also important to understand what the company thinks of its future quarters. And more importantly, the immediate next quarter. That's a very, very important, estimation, because if you pull the guidance, or the company comes in and says, look, we are going to be doing less than what we had said before, or whatever the consensus was, that hurts the company's stock price. And exactly what happened with Meta. So the first quarter guidance calls for revenue in the range of $27 to $29 billion. So Meta came in and said, we're going to do $27 to $29 billion in revenue. That's about a growth of 3 to 11%. But the analysts had expected $30.2 billion. So obviously, now the future growth has been slowed down, or the company estimated that it's going to be having a slower growth than what was originally anticipated. That hurts the stock price quite a bit. Why? Because what is a stock price? Stock price is the present value of the future cash flows of the company. And if the company is saying that in the future and immediately in my next quarter, I'm going to be making less than what you all are estimating, I need to reduce the stock price that is today. And that's exactly what happened. Did the market overreact? I don't know. But missing the EPS and pulling the guidance for revenue for next quarter definitely did not do well for Meta. Now, I have put out here another stat, which is interesting. So this is about 3 billion active users on Facebook. Now, if you really think about it, 3 billion out of 7 billion people in the world, that's like almost half the population active users. And if you have captured half the population, that's a big deal. But I personally think that the active users, are declining. Not only are they declining, but I think the activity is declining as well. And I can attest to myself, I have a Facebook account. I don't go on it. Honestly, I don't go on it. Technically I'm an active user, but my activity has been pretty much nil over the last 2-3 years. As a matter of fact, I think if I have to follow other people, I choose LinkedIn. That to me gives me an update of where everybody is in my social circle, and that's good enough. I don't need to go to Facebook. I don't need to see people's vacations and so on and so forth. But yeah, I think it's on its own, standalone, looks like a great stat. 3 billion active users, but how active are those users, and are they declining? And I think they're declining. Their activity is declining. That's a cause of concern. So now another thing was, obviously, when you look at free cash flows of a company, you want to understand, where the valuation is relative to the free cash flows. And free cash flows are a very, very, very important metric, because these are not GAAP numbers. GAAP numbers can be manipulated. Free cash flow is what you are generating from a cash flow perspective. That cannot be manipulated. It does not matter what accounting practices you're using. Now, if you look at Meta, over the last 2 years, it has generated $30.7 billion in free cash flows. And I'm taking an average of 2020 and 2021. So the free cash flow grew from $23 billion in 2020 to $38.4 billion in 2021. Crazy growth, right? So the average was 30.7. Now you look at the companies that did well after the earnings. Amazon had a free cash flow of $31 billion in 2020, and it fell to minus $9 billion in 2021, an average of $11 billion. Now, Amazon has come out and said that, we are taking this, we are basically going to be reinvesting the money into, our operations, and therefore we have a cash outflow. But nonetheless, at the end of the day, for the shareholders, Amazon generated on an average $11 billion in the last 2 years, and a minus or a negative cash or a cash outflow in 2021. Then you look at Apple. Apple is obviously solid, $73 billion in 2020, $93 billion in 2021, and the average was $83 billion. Netflix, on the other hand, had a $2 billion free cash flow in 2020 and generated an outflow in 2021, with the average at almost $1 billion or $0.9 billion. Alphabet came in at $42 billion or 42.8 in 2020 to $67 billion in 2021. at $54.9 billion average in the last 2 years. As you can see, of the FANG stocks, if I take an average of the free cash flow over the last 2 years, Meta generated more free cash flow than Apple and Netflix, and not so far away from Alphabet, which is a quite established company. Apple has been around for a long period of time. So again, you look at it from a free cash flow perspective, Meta is in a pretty good shape. And then I looked out here the market cap of these companies: $661 billion for Meta, $1.4 billion for Amazon, $0.8 trillion for Apple, $180 billion for Netflix, and for Alphabet, $1.9 trillion. Then I just did a simple math. I just divided the market cap by the average FCF. Now, the only thing that I've done here is I've taken Amazon's last year's free cash flow, because this outflow I feel was a bit inorganic. This was basically consciously made decision. So I said, you know what, rather than taking $11 billion as the average, I'm going to be taking last year's $31 billion in free cash flow. And all I did was I divided the market cap by the average free cash flow. That means, for the price of the stock, how much free cash flow is the company generating? And if it's 1-to-1, that means the company is cheap. If it generates $1 in free cash flow and the price of the stock is $1, then it's 1-to-1. It's cheap. I'm not taking into account any sort of growth in the future. So looking at this, the Meta stock is actually cheaper than any of the FANG stocks. It's cheaper than Amazon, it's cheaper than Apple, it's cheaper than Netflix. Netflix is crazy, 203.5. I don't want to buy that just based on this figure. Alphabet is 34.6. So again, you can see how cheap the Meta stock is. And again, just as a disclaimer, I took these market cap numbers from Yahoo Finance. As a matter of fact, I think the free cash flow numbers also come from Yahoo Finance. So you can go and see out there. Just wanted to put this out here for the FANG stocks as a comparison. Meta is definitely cheap, from the perspective of the free cash flows it generates. So what is ailing Meta? What's happening out there? So first problem is with Meta is that metaverse is a far, far away universe. It seems like it's many light years away. That's where the company has pivoted. That's where the company wants to go. And nobody can say with confidence if this will be a successful venture or not. One important stat is Realty Labs, that sort of is working on this metaverse. Kudos to the company. For the first time, they reported how much money they're losing in getting to this metaverse. And Realty Labs reported more than $10 billion losses in 2021 alone. And they've given a sort of year-by-year breakdown of how much they're losing and trying to get to this metaverse. $10 billion loss in 2021 alone. So if Facebook had not pivoted into Meta, they would have sort of blown through these EPS estimates of the analysts. So now two things are happening. A, this metaverse is far away. We don't know how far away it is. We don't know if we'll get there. Oh, by the way, in order to get there, we are burning a lot of cash. We've lost $10 billion in our attempt to get there. And if you see the year-by-year breakdown, these expenses are increasing. So just something to keep in mind. The second piece of the puzzle is obviously the mobile ads. They're hurting. I do not know if you know about it, but what's hurting them quite a bit is Apple's privacy change. So if you go and download an app from Apple, it actually now says, it actually asks you, do you want, your activities to be tracked? And you can now go in and say, no, I don't want my activities to be tracked. And if your activities are not tracked, and if you download this Facebook app, what ends up happening is, the people who would get that data about what you're doing, your activities, they cannot target those ads to you, and therefore it becomes less of a sort of profitable venture as far as targeting the ads is concerned. So they're losing out because of this, the iOS update of privacy. So that's a big problem that they're facing. And I think they talked about the fact that they lost $10 billion because of this. So I think that's one big thing that's going to continue. Apple is not going to change its policy, and the targeted ads through Facebook are going to be becoming more and more difficult, and that's going to keep on hurting Facebook, especially when we know that their new venture, Metaverse, is very far away. The second part was TikTok. Obviously, if you listen to Google's earnings, YouTube is a big part of their revenue generation and so on and so forth. And now Meta talked about TikTok. It's taking away a lot of young people. There's a lot of young people who are actually spending more time on TikTok, less on Facebook. Therefore, it's harder to sort of target to them. Not only that, what's also happening is that Facebook has started to go into these reels. But yeah, you can grow the reels, you can bring those TikTokers back onto Facebook, but it's very hard to sort of advertise on those reels. And therefore, you're losing money on advertising there as well. Not only you're using your, you're losing your user base, but you're also losing your ability to advertise if you try to bring that user base to do exactly what it does on TikTok, on Facebook. So it's like a double-edged sword. So that's another problem that they sort of, talked about. The thing, I think nobody kind of talked about it, but I think this is my personal opinion. It's not so stellar image. You go to any YouTube video, you kind of scroll through it, and anytime somebody's saying, look, Meta is a buy and so on and so forth, and all the millennials are against it. People don't like Facebook. And if, God forbid, if another whistleblower comes out of the closet tomorrow, we're in trouble. As far as the stakeholders are concerned, I don't care what happened to the Facebook platform because I don't use it. But as far as the Facebook shareholders are concerned, I think we're in trouble. I think the stock will drop even further. One thing that nobody talks about is, actually people talk about it, but not in this context anyways, is the retail investors. Retail investors have kept the market afloat for a long period of time, and retail investors are these millennials who really don't care about Facebook. So there's an image problem that Facebook has as it tries to woo back its users back onto its platform. So those are the three things I would say. Again, one is Metaverse, quite far away, losing money as we try to go there. Second of all, there's the Apple privacy situation where you can actually switch off activity tracking, and therefore you are less of a lucrative target for any ad maker. And then the third one is obviously TikTok, people going away, users going away, and so on and so forth. And then lastly, it's just that the whistleblower situation, it's just not considered to be a good ethical company. Whether it is or not, I'm not here to opine on that. It's just my opinion that that's how the investors, especially the retail investors, the millennials, are looking at the stock. So that's a problem. So anyways, from a conclusion perspective, what do I do with it? I want to get to 25 stocks. I wanted to get to 25 stocks. It's much easier to get to 25 stocks now than it was before. I think I'm just going to wait and watch. If I see, that deadline, as I talked about in my previous slide, if that continues, I'm going to stay away. I want to see some life in the stock before I actually go back into it. I think the financials are strong, but I think the future looks a little bit dark from where we stand today. At 240, maybe it's a good stock. But you know what? I want to wait and watch. I'd rather take this money, put it into Google. I talked about getting 100 stocks of Google once the split actually happens. So I'm going to save my money, might actually go there as opposed to coming here. Because I expect Google stock price to actually go up once the split actually happens, when demand for stocks actually goes up. So anyways, guys, this was my analysis on Meta. I think free cash flow perspective, best of the FANG stocks from a value to free cash flow perspective is concerned. But you know what? Feels like the future is looking tougher and tougher. I'm not going to abandon my stock. I'm not going to sell it. I'm going to let it be. It's down about $1,000, 25% from where it was, but that's okay. Anyways, guys, Thank you again for watching and listening. I will see you with another update later down the road. Take care. Bye.